elevation.
Cool and Dre.
Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200 for
What's going on, guys? Welcome back to another stock analysis. All right, this is going to be a follow-on to the company CTM. All right, they recently reported earnings. Go to the Patreon, reference the CTM, the original CTM stock analysis video for more context on this video as the actual add-on. All right, so a little bit of demand from the Patreon wanting to see a follow-on for this. So, with the reported earnings and, as I digested everything and looked through all the business model and the financial and so forth, I'm not surprised, okay? So they reported earnings here actually on the 8th. So on the actual calendar, that was last Friday, all right? And the stock went up 14. So I'm surprised and I'm not surprised that the stock went up 14.68%. One, I'm not surprised that the stock went up. And two, I'm surprised that it didn't go up more. So this company has solid fundamentals. This is one of those where they're, the stock should be razor thin to actual upside capital appreciation with value creation. They're very close. And we're going to talk about some highlights during the quarter. What do I think is going on with the company? If I still think it's a good investment and so forth. So with that, without further ado, let's get into it. So ticker CTM Castellum, 75 cents a share on the New York Stock Exchange. All right, market cap is 71.24 million. What are they? Where are they headquartered, or what do they do? At least they're an IT company. They do IT consulting and other services, but they're heavily involved in national defense security. Headquartered in Vienna, Virginia, 1934, Old Gallows Road. Okay, awkward name there. I'm curious as to some of the history, of what they did on that road. But anyway, let's go to the actual evaluation sniff check with the traditions of what we do. And it looks like 1.22 million debt, 14.88 million in cash. Solid balance sheet. And what makes this even more solid is improvement to balance sheet fundamentals. We'll go here on their actual earnings statement. Cash and cash equivalents as of March 31st, 2026 was 15.8 million as compared to 14.9 million. So, and then no long-term debt. The remaining long-term obligations were paid off during the quarter. So, company's debt-free, guys, all right? And this actual cash position is looking like they got about they added another million on the balance sheet and they reduced to zero long-term debt. We'll go to the financial statement on the balance sheet analysis going quarterly. And as you can see, from last quarter, they had 1.2 million total in debt to now reporting 0.7. All right, 700 grand of debt, which is short-term current liabilities to be associated with leasing and so forth, okay? So solid fundamentals on the balance sheet. Love to see it. Everything about this company screams fundamentals. Sales are going up. Share count. Let's look at their share count. Share count is starting to go down. Cash on the balance sheet is going up. Debt is going down to the point to where they got no debt. And they got strong liquidity, cash position, big time war chest for this size of a company. Profitability margins, flirting with profitability, guys. Very close to profitability. They're probably going to be they're going to be profitable by the end of this year. I'm pretty convinced, okay? And, looking at earnings consensus estimates, the street has them growing 19.17% this year, but honestly, if they keep posting, above 20%, quarter over quarter, year over year growth, they're gonna beat that whole estimate, by 3% to 3% here. Okay, so and then next year, consensus estimates got them growing 6.37% from this one lowly analyst. Uh, I don't know if I agree with it. Their operational highlights and their reporting are saying that their backlog is increasing, okay, and their qualified pipeline went to 900 and their identified pipeline went to 938 million, up from just a quarter ago 817 million. So tailwind on qualified pipeline is kicking in, and I assess that shortly to follow conversion of that massive pipeline is going to follow. All right. So I mean, just think about that. This is a market cap of 71 million, and this company has a pipeline of 938 million. Okay, so they have a pipeline, and this qualified pipeline, what you got to think about is not all of it is going to convert right away. Okay, but you have your total addressable market, and then you have your total addressable servicing market. And the total addressable servicing market is the immediate target of availability of penetration to convert to sales, which is the qualified pipeline. And this qualified pipeline, dealing with the government, you have to go through procurement regulations. Everything has got to be up to snuff to the government, especially in the business of national security, which this company is currently in. So huge runway to continuing to just put up growth year over year. And with the actual fundamentals of everything that I've assessed with the company, very bottomed out, razor thin, deep value to where they should be jumping every time they make a hit on a little bit of growth. The actual stock should be going up. But why isn't it? Okay, why isn't this going up more dramatically? Okay, so um, they're just not that heard of from the financial institutional realm, and their applicability to their challenge that I assess with this company, all right, with the business, is it's such a small company that financial institutions wouldn't even bat an eye at it. Okay, so what's going to end up happening is one of their S curves they're going to have to prove out and just put up the numbers and actually grow. And then eventually, market cap will go up and they will get more credit for the actual execution. And, once they start getting up to, the half billion mark, as they go through this tough little slope of execution, then the floodgates of financial institutions will start coming in, and they haven't even hit the how do you say, even at then they haven't hit the actual big time investor institutions at that, all right, with the deeper pockets. So I believe there will be a staggered effect of investment capital coming into this equity. I think it's going to take a couple years, 2 3 years for this I'll admit it's probably going to take a couple years, 2 3 years to get, to execute on getting that pipeline up, increasing sales, maybe doing some little bit of expansion on margin, getting profitable. After the first year, they'll probably get profitable and then continue to expand margin and increase sales and so forth. Um, you know, I think that, even with insider ownership, bear with me, we're going to go down and take a look at it. Even with the sweet spot of 21%, notice 13.8% institutional ownership. So huge potential for institutions to come in and start increasing their stake. I think that this story here about this company is a lot of it is about institutional ownership. I believe that, it could be very well possible in 10 years that institutional ownership will be about 90%, guys. All right, that's great. I know it's hard to see it, but I mean, that's what I foresee, with this company with a decade out of projections, okay? So, going back to it, 23% revenue growth. I mean, if they keep this up and they start executing on pipelines and hitting a tailwind on actual macro and cybersecurity disruption between countries, this company is going to hit tailwind, and this tailwind of increased revenue, sales, and so forth. The beautiful part about their actual contracts and business model is it's all sticky. So all the growth that they capture is there to stay for the most part. Okay. Um, if they get big enough and they do enough government procurement to where, you know, maybe they got 500 million. Maybe they do 700 million worth of sales with the government, with landing of contracts and getting embedded in the infrastructure of national security. I believe that this company can garner immunity, all right? And what does that mean? Immunity from bankruptcy. That means the government will not allow this company to go bankrupt because it falls within the national security realm, okay? Even then, the management I assess is top tier. This gentleman right here is a superstar, David T. Bell. This CFO, I mean, he really knows how to give the medicine and a solid, run solid financials on a company and create shareholder value. Albeit the stock on the 1 year chart is down 20%, but I see all the value creation metrics within the company right now. And every time I look at this company, I'm thinking, Mr. Fundamentals, here we go. I really like it. I think there's a lot of doubters out there on the market, but I think the management team needs to just keep doing what they're doing, and they're going to be just fine. All right. So here's some considerations to what I assess that could be some risk stuff. Okay. Now you look at the age of the management team. I mean, I think general counsel and chief operating officer, they look fairly young, but I think CEO and CFO, unfortunately, I mean they look pretty young on the photo, but I mean they got they got some years on them. Okay, this gentleman's got even 30 years alone in the finance department, and the CEO, he's 45 years of military industry experience. So I mean, that's something to consider. What I would like to see is some, chief operating officer involvement here within 5 years, 7 years to take the reins. And eventually, when, chief executive officer steps back and, maybe takes over for chairman of the board, who knows? Chairman of the board looks fairly, kind of young, but, you never know what people have, as far as their own goals and timelines within their lives, okay? So, what do I think about Castellum, and what do I think about, valuation metrics is here and so forth, all right? So, if you look at an enterprise value standpoint, which is probably cheaper, standing around 55 mil, with the balance sheet and so forth, and then you look at their consensus estimates that they're going to do 67 mil next year. Well, it's going to be more. They're probably going to look at. I got them doing 70 plus mil next year. Um, Maybe 75 mil when you get a compounding effect on earnings and so forth. Um, they're gonna they're going to be revenuing their market cap by the end of next year in combination with margin expansion and I assess gross profit margin expansion potential along with, and that may be the factor of just putting them over the hump, but profitability on EPS is going to start coming in. I think towards the, and these consensus estimates I got off, I don't agree with the street. We could be seeing, I think we could be seeing multiple expansion potential here. I think a two bag 3x, actually a 3x is probable, within maybe the middle of next year. So about a year out, this thing's probably, I could see a 2.5, 3.5x, you know what I'm saying, if they keep up with this. What can derail that though? Okay. What can derail that? If they do an acquisition, it would dramatically change the risk profile, risk versus reward profile with this actual stock, because the market can assess they're overpaying and there's a lot of executional risk. And depending on how they structure the acquisition, if they got a bunch of cash, so I'd hope they would use cash, but hopefully they don't use debt. But if they did an acquisition and they did 1 million, $2 million acquisition, I think that's appropriate. But a lot of these companies will overshoot. With the actual balance sheet here, let's say that they got 15.8 mil on the balance sheet. Let's say they do an acquisition for 10, 12 million. Well, that would polarize the total risk versus reward proposition on the dependence of the success of that acquisition. And that risk would actually impact the stock valuation. All right. And they would remain in multiple compression here. So I think there's a part of the market which is pricing in a potential acquisition, even though the company, isn't guiding that, they aren't guiding that they have a solid, acquisition working right now. But it's put in here, Castellum is executing strategic acquisitions of firms that share our passionate commitment to the U.S. national security, blah, blah, blah. But, it is kind of a part of their business model, although they are focusing on organic growth right now. So as an investment, I like the setup here. I think that risk of bankruptcy is, last video I said it was 1%. Now I think it's, 0.25% of 1%, dramatically de-risked. Um, so would I build a big position here, me personally? You know, um, I already have a cybersecurity play, so it would break my diversification rules for my own how I run my portfolio. But I think it's a great opportunity for an investor coming in here. I think it's okay buying right now at 75 cents. I think their chance at, even in after hours, just going down 1 cent to 74. You could probably get this at, 70 cents a share, I mean, but I honestly, I wouldn't be too greedy. I would just start averaging in. And then as it declines, I just buy and buy more shares because you don't know when one little news press release is going to happen, and the next thing you know, bam, the stock is already doubled right off the bat. You could see an overnight 200% gain, on this type of setup here. So that's what I got. Not financial advice. I did say in the prior video it's not for me, but that doesn't necessarily mean it can't be for someone else, okay? But I hope you guys got value out of this. Hit the thumbs up. Check out my Patreon if you want to learn how to become, if you want to reap the benefits of development, getting access to my hot stock picks, having community, more direct access to me, and also supporting the little guy out here. All right, check out my Patreon, $14.99 a month. If it's too expensive, click this button up here. You save 20% by paying annually. I think that, I'm getting a lot of positive feedback on the Patreon. I have a very low churn rate. Nobody is leaving the Patreon. They all love it. For the most part, I think that it's going to be very value accretive and benefiting off a community and getting exclusive content to advanced investor stuff or investor, analysis is quite tough. The market is saturated with a lot of quantity, but I assess for investor content, there's not a lot of quality out there. Okay. So with that being said, thank you all for your support. I love y'all and take it easy.
You take the blue pill, the story ends. You wake up in your bed and believe whatever you want to believe. You take the red pill, you stay in Wonderland. And I show you how deep the rabbit hole goes.
One thing to question your mind, it's another to question your eyes and ears.
Remember how you felt when you were alone? Where's pain? You were miserable. That's why we're here.
You're not gonna do it, are you? Change the world. You're afraid.